Cool. So, consumer finance. What is the state of consumer finance today? I would say it's extremely capricious. So you have systems of highly regulated walled gardens. No one can work with anyone else. No one can talk to anyone else. Steep cost of interaction. You have a situation with people being debanked and removed from platforms, capricious in the sense of individual institutions as well as governments. And you have situations where arbitrary limits are placed to what people can spend, how they can spend, that may not even have to do with regulation. It's also politicized. So you have, I love this, is a picture from right here. Folks who speak uncomfortable political speech being removed, bank accounts frozen, the basic typing they rely on to move their money and to save their money is taken from them. You have very actively politicization, not just on political belief, but also religious belief, all across the world. And finally, and this should come as no surprise to anyone here, it's being debased, and you're constantly fighting a system of soft money with expropriation. That expropriation obviously occurring at the level of inflation, but also at the level of tax. And so, where's the exit? Where is this promised exit? Historically, the answer has been offshore private banking. It's got a long and rich history, but it's stigmatized, and it's thought to be criminal, and it's largely on the fringe. It provides incredible opportunities for access if you're filthy rich and part of the lucky few. And it is deeply international, but often, your interactions with a private offshore bank are far from the level of digital nativity that I think folks expect and deserve. And finally, if it's not your keys, hopefully everyone here knows, it's not your coin. So, as I think about a solution, and I didn't want to present anything about my background, but we will do a great job. I'm trying to remember before I finish. But private banking, I think, is part of the answer, but the critical component is private banking for the digital masses. So what do I mean by that? Such a private bank needs to be natively international, but also natively digital. It needs to be inclusive instead of just upper and highest net worth folks. It really needs to reach everyone. Human-centered, human-focused banking institution for as many people as possible. That means completely and radically reducing costs, which I think is uniquely possible in free state initiatives. It means returning to a sense of self-sovereignty, and doing that because you can eliminate some of the critical constraints to the system fundamentally through self-custody. And so what I'm thinking about is not a bank account. Thinking you disrupt the concept behind a bank account, that your interactions with the bank are really about typing. In sort of AI terms, a bank co-pilot. In terms that Lynn was talking about, I really think about this as a network, a mesh network, a router that connects you to the traditional financial system flexibly across the world with multiple nodes. So your digital currency is at core. Full bank is established as your partner in moving funds, but not holding funds. Funds remain always yours. Interconnectivity with SWIFT and IBAN, a global credit card to spend on, the ability to receive payments both through credit and cryptocurrency. Prospera would be one of multiple jurisdictions. The idea is to achieve deep resilience through diversification, but to focus critically on free cities, free societies, and so a network of free cities and free societies, all of which have a native bank, all of which connect into a single interface and a single brand. So one of the key constraints from a regulatory perspective is that you can't run around marketing this, which is fine. We have only reverse and non-solicitation in terms of our outreach to clients. It's all handled in person, handled through partners who leverage our infrastructure, but who can advertise for themselves. At a fundamental level, we win because we build a unique and global brand for this activity. It's sized for regular people. So, I think the world of offshore private banking has been maligned, and in some cases rightly so. for being a money laundering tool, and really we're not interested in big dollars. We're not trying to move millions. We're trying to move money for individual and sovereign people and help them live more freely. And it leverages both distributed and delegated identification, as well as really pressing for no KYC where that's legal and possible. And so, maybe I'll take, I think this is my last slide. I think the opportunity to just kind of share where I come at this from. So I work at a company who's dedicated to private payments on cryptocurrency. We run Visa cards for individuals all over the world. We've had 140 different countries accessing our platform, based out of the United States, no KYC. We have 100% of our own cryptocurrency infrastructure, and so the rails are both ours and open to folks to use in a self-custodial way, and that's what we want to build here.
Awesome. How do you get banks to be willing to do this? Like the people with access to the system, how do you get them to be willing to participate so that you can deliver the service?
Yeah, same question actually. And if you've already talked to Seshat Bank, yes. Wondering if that's what you've learned from them and in what ways you do it differently.
So you have most of the infrastructure built out and it's more integrating it with Prospera, is that the thing, or?
Anything else?
Yeah, also curious what advantage, if you can summarize it again, Prospera gives you what you already built.
Great. Okay. Yeah, so I think the willingness to participate and the Seshat example, and Christian was very kind with his time to share. You see that? I don't know. There you go. Thank you. But really the critical link between a offshore bank and the traditional financial system is what's called a correspondent-banking relationships, which are coveted and very hard to acquire. A correspondent bank essentially places their regulatory status and license on the line in order to link themselves to the foreign offshore bank. And those linkages are made only after a significant amount of due diligence and comfort has been gotten to, specifically with regards to compliance, specifically with regards to questions around money laundering, anti-bribery and corruption, non-financing of terrorism, etc. So, among my many day jobs is going through due diligence processes with banks and including other regulators. I think we have developed one of the things, and kind of this to your question about infrastructure, one of the core things we've developed as a company is almost 120 pages of compliance policies and procedures, but also essentially embedding that into technology and a strong perspective about what sets us apart and essentially eliminates the possibility for abuse on our platform at any kind of scale commensurate with what you would see in the traditional financial system. So when I talk about reducing the size and scale to size this for a regular person, really one of the major challenges today is that if you're a criminal enterprise, a cartel, if you're a political exposed person pulling corrupt and sort of kleptocratic money out of a system, you're looking to move a lot of money. You're looking to move it quietly, and there's not a bank in the world that doesn't help. What the correspondent bank analysis is looking for is, do you have appropriate controls and policies and procedures? And one of the most critical controls is just assuring that you don't have the throughput to be able to move politically exposed corrupt funds, criminal funds, etc. So our perspective is that if you can return to kind of retail level, individual, right-sized, a person who spends $5,000–6,000 a month, not sending hundreds of millions of dollars in single wires, that kind of sizing is probably better than any policy or procedure you can have, going to help restrict the capability of tainted funds moving at any scale. And then beyond that, we have developed a lot of technology to really get us comfortable with those funds, including funds coming from folks without KYC. So, I think it's nothing to wipe away and wash away. I would imagine the process of finding your first correspondent banks, signing them up, et cetera, is probably the longest portion of this exercise. We do know a handful of folks that would be top of that list, but no guarantees that you would sign them up day one. But we think we're equipped for it. We think we have the technology for it. We have the policy and procedure, and we think that the structure of what we do really protects us for that. Beyond that, the infrastructure, again, self-custodial wallet technology on Bitcoin, which we're extending into Tron, Polygon, mainly for stable coins, and then a number of other currencies as needed. I'll get to Ethereum, I promise. But we're the core focus for us is to treat the individual as the core. They hold their funds, and all of their interactions are mediated through cryptocurrency, and then we do the routing into the rest of the system. And so having that infrastructure is kind of the core banking infrastructure for this institution, not so much the custody of funds, and not so much, frankly, deposits and the rest. It's really moving money into a fiat piping after having moved it through our current piping. So the fiat pumping we have a US dollar ledger system. We're extending it into a Mexican peso ledger system. We'll be extending it into multiple currencies. Each additional currency is a very limited lift, and we have all of that cryptocurrency infrastructure. And in terms of the advantage, I think so Prospera for me, has kind of a couple of core advantages. Advantage number one is the ability to get started quickly and at low cost, which means you can really fail fast if you need to, build attempted relationships and not sit on the cost of capital. Say it takes us 9 months to 12 months to sign up the first correspondent bank. We're not sitting on enormous amounts of reserve capital that makes no money, etc. Waiting for something to happen. It gives us the flexibility to negotiate the kind of regulation that we think is fair and that helps steward people's privacy. Again, our goal would be over time to have a layer of services that's no KYC. We do that in the United States, in Canada, and Mexico, where the law has specific thresholds below which KYC is not necessary, and we allow people to benefit from that privilege as they should. And so the ability to start with the existing regulation and successively adapt it to the use case, we think could be highly advantageous. And then finally, the lack of bureaucratic overhead, whether that's kind of having a slow-moving regulator or an uncertain regulator, or a regulator that picks up the phone and calls a bank without even announcing their real intention in any kind of formal way, is a major cost reduction. And we think that we can take that cost reduction and pass it on, which makes this possible for the regular person.
Awesome. Thank you, Niko.